Auditor will say, if that auditor is stupid enough, he will not perform a bank rec or he will not test the bank rec. He will find, okay, no loan from the directors. But then the reality is what? There was a huge loan. Another good example is sales are very less, not enough. And if you show this financial to your shareholders, they will start recall every of your kins and kith. Your father, grandfather, everyone, they will recall you. So to avoid this, what you do, on the 15th or 20th of December, you start issue invoices. Keep on issuing. What's the problem? Go to the system, generate invoice. 1, 2, 3. So 20, 30, 40 invoices. Sales now, boost. 200,000, 500,000, 1 million, any amount you want. You increase the sales. So sales increased. You can pass the double entry. Debit, receivable, credit, sales. But all sales are dummy or fake sales. Then you finish the year, you produce the financial, you go to the next month, January, 10th of January, you create sales return. You pass a sales return entry. Alibaba Kabir yani.
For you, if you can go and read, like he said,
yes.
Go and read. Read Enron case or WorldCom.
Standard. And in that situation, that standard allowed for non-similar activity business within a group, you don't need to consolidate. We will talk about consolidation when it comes to, but for the sake of Enron, I'm telling you. So, Enron had like huge group, 7th largest power generation company in the world. And their major business is to produce power and to distribute the power throughout the world. So they had a transportation fleet, 600,000 vehicles that they kept as a different revenue center. So their service, they sell the service to the power generation part of the business. And not only to them, even to outsiders also. So now, but that is one of the, now if I show you,
Yes.
where are my glasses?
Yes.
So, one is power business, other one is transportation business. But this power business is seriously struggling, serious problems. Cash flow is tight, no enough cash flow. They had done a lot of juggleries. One of the jugglery is they started selling. Mr. Siraj.
Yes.
So, one of the jugglery what they did, no, they didn't have enough cash to run their day-to-day operation. Now, when you say that business with a power generation, meaning they definitely should have equipments. They definitely should have machines. Now since it's the 7th largest power generation company, meaning they must have plants, not small machines or small equipment, huge plants. Correct? What they did, they found some outside buyers, they sold this plant and received the cash, and they used that cash for their day-to-day lavish operation, including paying very fat dividends to the shareholders. So shareholders are happy. You know, they go to a bar and having a cigar and all this. They didn't bother about what is happening in the business. Then they made an agreement with these people who bought the machine. Please don't take the machine out. Leave the machine here. We will pay you rent on a monthly basis. That time, there is no thinking of substance over form or sale and repurchase or substantial arrangement for how that financial instruments, IFRS 9 comes into play. That was not thought of that time. So, that is one side. Other side, what they did, when they prepared the financial statement, the loss, they reported a huge loss. But this business reported a huge profit. but belong to Enron. But then they did a clever work. They put a double journal entry, management fees. They debit all the profits and then transfer to this company. And IAS 22. They use IAS 22 as a escape route. IAS 22 told if the business is non-related, see, this is power, this is transport, so they are not necessarily that related. So you don't need to consolidate this. They escape that. So now here, see, already debit here. Now this debit become credit here. The net answer become a plus. And they presented this to the shareholders. That loss is been hidden. It went behind the screen. And that is another way of window dressing.
Most of this thing they did without it.
Yeah, see what the Arthur Anderson, that's what the outcome of this. Some shareholders felt something wrong. They went to courts. Maybe after 2 or 3 months of auditors signing the financial. Who is the auditor? Arthur Anderson, number 1 audit firm in the world. Then, when these shareholders went to courts, court started investigating this. And they uncovered all this. And they said, immediately liquidate this business, sent the directors to the jail, and then they went and catch the auditor. Arthur Anderson, they said that internationally your license will be seized. That's why in Middle East, before that time, I think it is 2001. So I reached Doha 2003. So in Middle East, they were the number 1 kingmakers. Arthur Anderson with regard to auditing and financial practice. When they had to close, news started spreading. Ernst & Young slowly approached Arthur Anderson team, take the staff along with the files. That's why E&Y is number 1 audit firm in Middle East. This is the summary of that. So there are other like WorldCom, Railtrack, Parmalat, Satyam Computers. In Sri Lanka also we have one bank.
We have like this.
Pramukha Bank.
India now the banking group.
Every organization you will find culprits. You got to be very transparent. Your financial statement is your mirror image. It has to be carrying a high quality data, and we had to know that some qualitative characteristics. One of the qualitative characteristics is faithful representation.
True and fair.
See, you go to courts. The court before they start listening to you, someone come and present the Bible or something, and then you go to present your oath. Same story here. Now these shareholders believe and trust the finance professional, assuming seeing ACCA qualified, CA qualified, CPA qualified, meaning you are ethically preparing the financial statement, not to come and make hangy-pangy things and then keep that 1 or 2 guys and live your life. It's not what expected. Anyway,